March 27, 1980, Silver Thursday. Two Texas billionaires sat in their offices watching silver prices collapse from $21 an ounce to $11 in one day. They had tried to corner the silver market, own a third of the world's supply, drive the price to infinity. They almost succeeded. Then it all came crashing down. This is the story of the Hunt brothers, the silver squeeze that nearly destroyed the American financial system, and the day two of the richest men in the world lost everything. To understand what happened, you need to know who the Hunt brothers were. Nelson Bunker Hunt and William Herbert Hunt, sons of H.L. Hunt, one of the wealthiest men in American history. Texas oil fortune, billions of dollars, old money, conservative, libertarian. The Hunt brothers believed the financial system was broken. They didn't trust the dollar. They didn't trust the Federal Reserve. They believed inflation would destroy paper currency. In their view, only hard assets had real value. Gold, silver, oil, land, things you could touch, things governments couldn't print. This wasn't just investment philosophy, it was ideology, almost religious conviction. In 1973, they decided to act on that belief. They started buying silver. Why silver? Gold was obvious. Everyone bought gold as inflation hedge. But gold was expensive, heavily regulated. The government controlled it. Silver was different. Industrial metal, used in photography, electronics, jewelry, essential but overlooked. The price was low, around $3 per ounce. And here's what the Hunts calculated. There wasn't that much silver in the world. Total above-ground silver supply was maybe 4 billion ounces. Sounds like a lot, but it's finite. If someone bought enough silver and held it, they could control the price. Supply and demand, Economics 101. So the Hunt brothers started buying, not paper contracts, physical silver, actual metal, bars, coins, bullion. They bought through shell companies, different names, hidden ownership. They didn't want anyone to know what they were doing. From 1973 to 1979, they accumulated slowly, quietly, buying whenever prices dipped, storing silver in vaults across America and Europe. By 1979, they owned about 50 million ounces of physical silver, one of the largest private holdings in the world. But they wanted more, much more. The futures market gave them leverage. You could buy silver futures contracts, promise to take delivery of silver at a future date, put up only a fraction of the price as margin. If you bought a contract for 1,000 ounces at $10 per ounce, that's $10,000 worth of silver. But you only needed to put up 10% margin, $1,000. Then, when the contract expired, you could either sell it for cash or take physical delivery of the actual silver. Most traders never took delivery. They just traded contracts, paper silver. But the Hunts were different. They took delivery, demanded the actual metal. This was brilliant and devastating. When they took delivery, that silver came out of exchange warehouses, off the market, gone. Less available silver meant tighter supply, which pushed prices higher. In 1979, the Hunts accelerated their strategy, bought aggressively, futures contracts by the thousands, then demanded physical delivery. Other investors noticed silver prices rising. Momentum built. More buyers entered. The price climbed. Silver in 1979, $6 per ounce. By late 1979, $11. December 1979, $15. The Hunt brothers, along with some wealthy Arab partners, now controlled an estimated 100 million ounces of physical silver, plus futures contracts for millions more ounces. 1/3 of the world's deliverable silver supply, in private hands, mostly theirs. January 1980. Silver hit $21 per ounce. Then it kept going. 25, 30, 40. January 17th, 1980. Silver peaked at $50 per ounce. $50, up from $6 just a year earlier, an 800% increase. The Hunt brothers' silver was now worth billions. On paper, they had gained over $4 billion, one of the most profitable trades in history. But they didn't sell. They wanted to hold, keep accumulating, drive the price even higher, maybe to $100, maybe more. This was the problem. They weren't just investing. They were trying to corner the market, control supply, manipulate price, and other people noticed. The COMEX, the commodity exchange in New York, where silver futures traded, they saw what was happening. The Hunt brothers were distorting the market. COMEX had a rule. You could only hold a certain number of contracts, position limits, to prevent exactly this kind of manipulation. But the Hunts had worked around it, used different companies, different names, technically separate positions, practically all controlled by them. In January 1980, COMEX changed the rules, specifically to stop the Hunts. New rule, Silver Thursday rule. Traders could liquidate existing positions but couldn't open new long positions. No new buying. This cut off the Hunt's strategy. They couldn't buy more, couldn't drive the price higher. The squeeze was over. Worse, they were massively leveraged. They had borrowed billions to buy silver, used silver as collateral for more loans to buy more silver. A leveraged loop. As long as prices rose, this worked. Banks accepted silver as collateral, lent money against it. But if prices fell, they'd need to post more margin. Come up with cash. Lots of cash. February 1980. Silver started falling. $25, $20, $15. The Hunts needed money. They went to banks, asked for loans, offered silver as collateral. Banks refused. Too risky. Silver was falling. They didn't want to be left holding a collapsing asset. The Hunts were trapped, owned billions in silver, but couldn't sell without crashing the price further. Couldn't borrow against it. Couldn't meet margin calls. March 1980. The squeeze intensified. Margin calls came daily. The Hunts scrambled, sold other assets, borrowed from anyone who would lend. It wasn't enough. March 25, 1980. A major brokerage holding Hunt silver contracts demanded $135 million in margin. Immediately. The Hunts couldn't pay. March 27, 1980. Silver Thursday. Silver collapsed from $21 to $11 per ounce in one day, nearly 50%. Panic selling. Everyone trying to exit. No buyers, just sellers. The Hunt brothers lost everything, in hours. Their silver holdings, still worth billions. But they couldn't sell without destroying the market completely. And they owed billions in margin calls and loans. Banks that had lent to the Hunts faced disaster. If the Hunts defaulted, banks would be stuck with billions in silver they couldn't sell. Financial system contagion. Brokerage firms that handled Hunt trades were exposed. If the Hunts couldn't pay, the brokers would have to cover. Some brokerages might fail. The Federal Reserve watched nervously. This wasn't just two billionaires losing money. This was systemic risk. Potential financial crisis. March 28, 1980. Emergency meetings. Federal Reserve. Major banks. Treasury Department. The decision. The Hunts were too interconnected to fail. Not too big, but too entangled. Their default would cascade through the financial system. A consortium of banks arranged a bailout, $1.1 billion in loans, to prevent immediate default, give time for orderly liquidation. The Hunts signed, had no choice. The alternative was bankruptcy, criminal investigation, ruin. Over the following months, Hunt silver positions were slowly unwound, sold gradually, orderly liquidation. The final tally. The Hunt brothers lost approximately $1.7 billion, most of their fortune, gone. They sold ranches, oil fields, art collections, horses, real estate, everything, to pay debts. In 1988, they declared bankruptcy, personal bankruptcy, billionaires to broke. There were investigations, congressional hearings, accusations of market manipulation. In 1988, a jury found the Hunt brothers had attempted to manipulate the silver market. Civil penalties, fines, no criminal charges, but their reputations were destroyed. Nelson Bunker Hunt lived until 2014, spent his final decades quietly, a shadow of his former self. William Herbert Hunt died in 2023. Both lived to see their silver gamble become a cautionary tale. The silver market never recovered to $50, not for decades. Today, silver trades around $25 per ounce. The Hunt brothers' squeeze taught several lessons that remain relevant. First, you cannot corner a market, especially a global commodity market. There's always more supply. Regulators will change rules. Other players will fight back. The Hunts thought they could control silver, but the market was bigger than them. When COMEX changed the rules, their strategy collapsed. Second, leverage is dangerous. The Hunts made billions on the way up, but leverage works both ways. When prices fell, they owed billions they couldn't pay. Leverage amplifies gains. It also amplifies losses. And when things go wrong, they go wrong fast. Third, conviction can become delusion. The Hunts genuinely believed in hard assets, that silver was undervalued, that paper currency would collapse. They might have been right long term, but markets can stay irrational longer than you can stay solvent. Their ideological conviction blinded them to risks. They kept buying at $50 per ounce, refused to sell, believed it would go to 100. Fourth, regulators will intervene. When your trading distorts markets, regulators step in, change rules, specifically target you. The Silver Thursday rule was written to stop the Hunts. It worked. Fifth, systemic risk forces bailouts. The Hunts got bailed out not because they deserved it, but because their failure would hurt everyone else. Too interconnected to fail. Banks, brokers, the financial system, all exposed to Hunt silver positions. This pattern repeated in 2008. Different assets, same logic. Systemic risk requires intervention. Sixth, even billionaires can fail. The Hunts were among the richest men in America. Didn't matter. When the squeeze failed, they lost everything. Wealth doesn't protect you from bad decisions. Sometimes it enables worse decisions. You can lose more when you have more. The Hunt brothers' Silver Corner was one of the most audacious financial schemes in history. Two men tried to control a global commodity. For a moment, they succeeded. Then reality reasserted itself. Markets are bigger than individuals. Supply and demand work. Leverage kills. Regulators intervene. March 27, 1980, Silver Thursday. The day two billionaires learned these lessons the hard way. Their silver was real, physical metal, something you could touch, hold, store in a vault. But the debts were also real. The margin calls were real. The bankruptcy was real. Hard assets couldn't save them when the market turned. The Hunt brothers tried to corner silver. Instead, silver cornered them. This is the story of the greatest commodity manipulation attempt in history. The men who almost succeeded, and the day it all collapsed. One market, one metal, two billionaires, and one very expensive lesson. You cannot corner the market. The market always wins.